Good morning, traders. Welcome back, Mr. Kyle. Kyle Stir of all Kyles. Anyway, it's a nice Friday morning. Um, I'm going to be here a little bit in the morning, and Kyle will close up. But uh, I just thought I'd join in this morning a little bit. It is getting close to the end of the year. Wow. It's crazy. I don't know where this year went. But I will be glad to kiss it goodbye for personal reasons, right? And we're going to have some great trading next year. I think January, February should be rocking. We're queued up for some wild volatility, which volatility is always great for traders. So let's take a look and see what we got going here. Currently, the market is getting a little bit of a push down, which I believe, it might even put in the top for uh, possibly even a year. I mean, of course, there's still a chance that they might have that last little burst of energy to go back up. And you can see what we did. Let's take a quick look here. Let me get my drawing tools out here, right? So we sold off right here during that FOMC. And it's amazing how we had a little trap down there and then pushed all the way up more than halfway back, filled this cave, except for this little area here. This is a cave, and also you could see this is the valley, um, a valley that acts as a resistance. So you have the high volume nodes and the low traded areas, which is kind of like a valley, right? So we went pretty close up to it, left a little bit, but I don't feel like, we're going to get back up there. But for the time being, I'm looking for a push down and possibly get down to 33 early this morning in this area. Um, Now, of course, seasonally, you can have a Santa Claus rally still, even after Christmas, into the new year. But I don't really trade seasonals that much. I keep one eye on it, but I look at one data point at a time, as you know. And for the time being, we're testing the overnight lows as we speak, right? Now, let me clear this out for a minute. Let's just take a look at like a daily chart, right? Just to give a different view. So this is the trend that we've been in for quite a while, right? We had this big sell-off that I was showing you, the overnight trap, and we came back into it. Now this is the 30 high moving average and 30 low moving average for the day on the dailies. And you can see that the 10 slope is still is still negative, which is kind of, you really want to be able to at least turn that up a little bit. And but we didn't get back above the 30 high moving average, which if we took out the previous US session highs, we can get back into this like sideways price overlap and then try to make a play to go all the way back up. I don't think that's going to happen at the moment. Currently, we're getting a little downward pressure, and I expect this to kind of continue. Um, all right. So sometimes the best moves are the ones that no one expects, right? So if they take out this 30 low, right, um, and they get below 40, pretty much 45, I think then, you have some pressure to continue this push. So if they get back below this top here, this previous rally that we had back into above the middle of this range, um, we get below 50, but I'd say 42 would be the clincher. If we get below 42, you could see us actually maybe even get down to 59.88 in this area to 15. So for the time being, we are starting to push down a little bit, and you might cause some profit taking this Friday because we're going into the weekend, and then we have 2 days before the end of the year, right? So let's uh, let's see what happens here. Now, yesterday, and I explained, I used to execute for multiple big institutions, funds, and for years on the floor of the exchange. And I will tell you, most of them are all done. 2 weeks before the end of the year, they close the books. They have their core position going into the next year, and they pretty much stay out of the way. You do get some, programs here and there, but the big, bigger funds usually don't trade to the very tip of the year. So, with that being said, we didn't have great volume. Yesterday was pretty tight, and I suspect we're going to have some of the same. But we could get a little bit of profit taking since we had a rally that, off of the lows, that short covering rally was a face ripper, right? Basically a 250 point rally. So we can easily come back and at least test down to 42 to 50 in that area. And we'll just let the market tell us which way they want to go. We don't want to predict. Okay, we don't have to predict. The data points tell us, kind of like an EKG on for a doctor, right? All right. I don't know, being a little funny, right? Okay, so let's take a look at this crude. Now, the crude has been just, for me, it's been horrible trade. You got to fade the rallies, buy dips for sell rallies, extremes, because we're still in a bit of a, let me bring this up here. And this moved a little bit, but this was the triangle that we broke out of right here, right? And things got shifted here. Okay, let's just straighten this out, just for purposes of understanding how this crude has been. It's just been a chop shop, right? You know, if you were just to connect the dots, right? And you just do this, you could just see that we're going nowhere fast, right? And rightfully so. I think crude is going to be interesting in January when Trump takes over. There'll be a lot of speculation, right? So we've got pretty much 2 weeks of price overlap, but I'm still a little bit friendly because we're maintaining an upper motion a little bit. We could work our way up to the 200-day moving average at some point, which is not far. It's right here at this 72.42. So you could see that on the dailies, on the bar chart, but you can also see this probably more clear with market profile because you could see the overlapping value area here for quite a while, over 2 weeks in a small range. When you're in a $2 range for over 2 weeks for the crude, that's got to tell you something. Meanwhile, my pivot is 69.92, right? And that's the PLC from yesterday. You could see it. It's kind of like a pretty interesting, important level because if they get below 70 even, which is a big mark, and they get below it enough, and they get below 92, probably going for a full retest back down to 69.30 and continue maybe back in this area. No direction, basically pretty neutral. We opened up a little bit up in the upper range, but we could easily fill in and trade inside the U.S. session highs and lows. Okay. Call me crazy. All right. Let's move on to the next chart. So the gold has been kind of in a holding pattern for me. A little bit of a bounce off of the swing low, but I'm kind of feeling like the gold is going to back off and continue to test, and we could get down to 26. I wouldn't doubt it, but we first would have to take out this inside pocket at 26, 22. We had two U.S. session lows there, the inside pocket over here from this pop that we got out of this space, and at the moment it looks like we are going to get down to that 26, 22. I would be a little bit more on the short side as we speak. In fact, I felt this was a good sell below here, this 37 area. So I'm thinking we're going down to 26, 23. Meanwhile, if they have a euphoric, pop or, or whatever you want to call it, the pivot is 26.47. You get about 26.47, we're working in the other side, the ledge above this point of control, the breakout area from the FOMC. That would be a positive thing. I don't think we're getting up there. I would be on the sell rallies mode until we test this level. And then 26.22 can be a very pivotal spot to keep our eyes on. They get below that, I think we can do a full retest down to 26. All right. And this EC is kind of trying to heal similar to the gold, right? They had the FOMC sell-off. They tried to, come back all the way, left the cave in a single prints yet to be filled over here. I highlighted that for you. And if we get back up above this 104.88, a good chance we're going to go and fill this cave and get on the other side of 105. I'm not really expecting that. We might test the overnight highs. I don't think we have the juice to get up there, but we'll see. My pivot is 104.59. Now, if we get below that, that's the POC from yesterday, point of control. We'll be back in the value area from the overnight session. Then we can test the overnight lows. So currently we're in a really small range. The EC usually isn't too crazy. Last 2-3 days of the year anyway. So not too much to say about that. I'm not too excited about trading the EC this morning, but we'll keep an eye on it. The bonds are they're really trying to hang in. You can see this price overlap in the last 3 days. And not looking good. We took out 1310, which was a low that we made in 2023. We haven't been down here since 2023. And considering that they lowered the rates twice, you can see it really hasn't helped the market. I think we're a little bit on the heavy side, And I do feel we have a chance to test 113 at some point. But I would use this area, this 113, 16 to 17 as a pivot. You could see it was important here. That was that swing low, retest here, the top of this ledge, point of control from this day. And this is the inside cave. So now that we're back above it, like the EC, we could drift a little higher. I'm not expecting miracles, but we could get to the other side here, 1330 in that area. All right. So let's go back to the main drawing board. I'm going to leave my stuff open for the day, but for the most part, I will be here in the morning hanging out. So if I see anything, I'll jump on. All right.